So you already know the forces of mortgage: credit, capacity, collateral, and cash. And yet you want to know more about your credit. Okay, I get it. Let's do it. Your credit score can go from 300 to 850. Most of us are at 600, 6 to 700 is totally acceptable, totally good to get a good rate. From 500, you could get a loan. How good is that? So anyway, to have access to the best interest rates, usually from 720 and above, you are great. You're in great shape. You're gonna get the best rates. A credit score above 720 is just vanity. You don't need it. 800, 820, you don't need it. Your credit score, say it's 700. That 700 is broken into 6 pieces that we have here. Your payment history accounts for 35% of your credit score. So very simple, don't be late on your payments. If you, for any reason, are late in a payment this month, your credit score is gonna have a huge impact. But it's not the end of the world. As soon as you get that account current, your credit score is gonna go back up little by little, and a few months it's gonna be in good shape. Second element, the balance you owe versus your available credit lines. It's not the same to have $10,000 in credit line and owe $9,000 that if you owe 100 or a couple hundred. So it's a big difference, and this accounts for 30% of your credit score. We are at 65%. You see, these 2 elements are the most important ones. So first one, don't be late. Second one, as much as possible, don't top up your credit cards. Number 3, your credit history, 15% of your credit score. That's pretty much how long you've had your accounts open. There's not much you can do about it. You don't have any account. Well, you can do nothing about the past, but you can go today online and open one account. You can watch this video if you don't know how to do it. If you've never had a credit card account, I'll show you how to get one. 99% guaranteed, no credit pull. 15% of your credit score is your credit history. Start making it today. Ideally, 3 credit cards is okay. Even better if you have a mortgage, it's going to be better. But don't never go get a loan to try to raise your credit. Don't get a car loan just to get your credit better. Buy the car if you need it, but don't buy it thinking that it's going to improve your credit, because you're going to get in much more trouble, and the benefit that you could get is not worth it versus the monthly payments that you're going to have to do for that car that maybe you don't need. Pulls of your credit made by creditors. This is the one that a lot of people fear, and because of this, they don't go and find out where they are standing to get a mortgage. You see, it's only 10%. And by the way, it doesn't mean that by pulling your credit, you're gonna kill it. It doesn't work that way. And it's only 10% anyway. Lastly, 10% type of credit that you have open. A good mix of credit cards, car loans, installments, mortgages is usually gonna give you a higher score. But again, you don't need it. You'll be fine. You don't need to get a rich mix of credit. You don't need to get new loans. Just pay on time. Don't get into a lot of debt. Don't go crazy applying for credit cards everywhere, because it's not going to help you.